Hello and welcome. I'm Brent Saunier with Profi 2020 Dental CPAs. Today we'll be discussing key tax provisions scheduled to expire in the near future, as well as comparing potential tax policies under the Trump or Harris administrations. First, let's take a 10,000-foot view of a few key provisions from the Tax Cuts and Jobs Act of 2017, scheduled to expire at the end of 2025. By preparing for tax changes now, you may be able to take better control of your outcomes, rather than being controlled completely by new regulations. First, the individual tax rate reductions. The Tax Cuts and Jobs Act lowered tax rates across various tax brackets, but unless extended, these rates will revert to pre-2017 levels, meaning higher taxes for many people. For many of you watching, this means the highest tax bracket increases from 37% to 39.6%. Next, the state and local, or SALT, deduction cap. The Tax Cuts and Jobs Act capped the deduction for state and local taxes to $10,000. Unless extended, the law will revert to pre-Tax Cuts and Jobs Act levels, which do not have a specific limitation on the amount of state and local taxes that taxpayers could deduct as part of their itemized deductions. As a business owner myself, I am paying extremely close attention to this, as the outcome will impact the viability of the pass-through entity tax, or PTE, that many states passed in response to the SALT cap. Then we have the mortgage interest deduction. The Tax Cuts and Jobs Act limited the mortgage interest deduction to interest on the first $750,000 of mortgage debt, but it will revert back to $1 million unless extended. The other most notable expiring provision is a qualified business income deduction, often referred to as a 20% deduction, the pass-through deduction, or the QBI deduction. This provision allows a taxpayer to exclude up to 20% of their pass-through income from their personal taxable income. There are income limitations specifically applicable to doctors, so many of you may have never benefited from this in the past. Unless extended, this will completely go away at the end of 2025. If this does get extended, this provision should be considered during your tax planning sessions. One of the most impactful changes is the bonus depreciation provision. The Tax Cuts and Jobs Act allowed 100% bonus depreciation, but then it started phasing out in 2023. The bonus depreciation will decrease by 20% each year until it completely phases out at the end of 2026. This provided a major benefit to taxpayers that were able to utilize a cost segregation study for real estate. In addition, bonus depreciation should always be considered during tax planning, as it can provide a positive or a negative impact on your state income tax. As I mentioned earlier, I want to briefly highlight potential tax policies of the two major parties. But it is important to remember there is no guarantee their proposed policies would ever be passed by Congress. Let's first start with the Republicans under Trump. Historically, lowering individual tax rates across most brackets, keeping the SALT deduction cap at $10,000, although recently Trump has indicated he may support restoring the full state and local tax deduction, thereby reversing the $10,000 cap that was part of his 2017 tax legislation. Lowering the corporate tax rate from 21% to 20%. On the other hand, the Democratic side under Harris is expected to propose higher taxes for high-income earners, especially those making above $400,000, increasing or removing the SALT deduction cap, potentially providing relief for high-tax state residents, raising the capital gains tax rate to 28% for taxpayers with income above $1 million. As tax laws continue to evolve, it's more important than ever to stay informed and ahead of the curve. As we quickly approach Election Day, we're constantly bombarded with media coverage, and it can be extremely overwhelming. Until the laws actually change, everything is speculation. Here are a few other things to help you keep perspective. Your tax situation is specific to you. Just because your friend implemented a tax strategy, it doesn't automatically mean it makes sense for you. And contrary to popular belief, just because you saw it on Facebook or TikTok does not make it true. Be careful where you get your advice. The IRS watches TikTok as well. If you'd like more personalized advice, feel free to schedule a free consultation with Profi 2020 Dental CPAs. We're here to help you navigate these changes and ensure you're prepared for whatever comes next. Thanks for watching, and we'll see you next time.